Here is why SEC doesn't want to approve ETF on Bitcoin. This is what happened on Bitstamp exchange very recently. The drop from like $8,000 to $6,200, and this happened only on Bitstamp. Of course, other exchanges followed to some extent due to the bots arbitrage, but the price at those exchanges, it reached $7,000 and it didn't fall that low. And it seems like it was prepared quite properly. Like here you can see higher highs, higher lows. So it seems like the price is going down and we finally broke this channel which we mentioned yesterday. So everything is made in order to convince people to sell on the way down. So those players who had an intention to drive the price lower, they wouldn't spend that much of their funds to do that. And actually it happened when the liquidity in the market is the lowest, the same way it happened in the beginning of April when the price surged from $4,000 to $5,000. So pretty much the same happened right now, but just the other way around. And actually you can see how this move is really similar to this move. Now, since the volume is really small and the order books are really thin, it's actually easy to dump the price, and at the same time you may open the short position on BitMEX or some other huge leverage exchange or set of the leverage exchanges, and in that way you will of course lose at this point, but you will get enormous profit on your leverage position. This is called manipulation, but it's very important actually to see what is happening. And if you look at the other exchanges which were not that manipulated, and Bitstamp as well, but still you would see that despite such a huge drop, despite all the possible panic that could happen here, the price actually didn't fall that low. It actually had this pullback and now it holds around $7,300, and instead of having a panic sell, this fall was actually bought out, and there was no much of the stops on the way down because you may expect the cascade of the stop orders when the price was going through the support level here and maybe some other areas in this place, but it didn't happen. It seems like the buyers are really strong. And a part of the price action, here is what I was going to mention today. This is a pretty old article, but somehow I didn't cover it yet on my channel. So they introduce the metrics called NVARF, or network value to aggregate fee ratio. And the logic behind this matrix is that it's really similar to price to sales ratio in the traditional markets, which is calculated just by the ratio of the market value of the asset divided by the sales. And apparently the lower this ratio is, the more valuable underlying company or asset is, because operating with the lower market value, they push the sales high, which means that their efficiency is high. So that's why the company is a good option to buy. So the same thing, the same rationale is behind this NVAFR matrix. So they calculate the network value, which is pretty much the capitalization of the asset, and some of the daily fees over a certain period of time. So it seems like the asset, the network, provides some value by paying fees to those who operates in this network, so like miners, right? And here is the data, what they calculated. This is the long-term data, and they have the data for the shorter period of time. But basically you can see that on the log scale, the values are from 100 to 100,000, which is for XRP. So they checked it for Bitcoin, Ethereum, Litecoin, Monero, Decred, Bitcoin Cash, and XRP. And since this is so huge values here, they argue that the network value for the asset is some number multiple of the dollar demand for use of the network as a settlement layer. And for different altcoins, it's like 700 for Litecoin, it is almost 9,000 for Bitcoin Cash, and it's 18,000 for XRP. So it's like how much it is overpriced. The best values are for Bitcoin and Ether. It's still 200 times almost, so it's also very high. And the authors of the article said this make them feel that from fundamental point of view, those networks, those coins are really overpriced. So despite they made a nice work, and actually you can refer to the data, the raw data, which they have the link somewhere here, so you can download it. It looks like that, and I think it's taken from the coinmetrics.io, which is one of the best sources for on-chain data which you can get out there. But here is my 2 satoshis on why I think it's not exactly correct when you compare this ratio and price to sales ratio in the traditional markets. So if it would be price to sales ratio, then here it shouldn't be the fees, it should be the value of the product which is provided by the network. And the product is not the fees actually, it's much more complicated. It's how much it is used to transactions, maybe the volume of transactions, something like that. So the formula will be much more sophisticated. And the fees is actually the sales for the miners, and in that case, the fees would be similar to sales, but for the miners. So like if the company would be the mining company and the sales will be the fees which they are taking for this product which network provides. And in that case, again, it should be not the network value here, but some value of the mining equipment which makes this operation possible. So you see, this is not exactly correct comparison, and if you want something the same, then you would have to replace this sum of daily fees with something like the inverted value of that. Because if you think about it, then just imagine the network which has the lowest fees for the operation, for the transaction. Of course, everybody will go to this network. It's not necessarily mean that the value of the capitalization will increase, but still, because of the few orders lower fees for the transactions, this ratio will be very, very high. So instead of dividing the capitalization on this daily fees amount, it should be multiplied on that daily fees amount. Then we would have a fair comparison between different companies based on their value as the capitalization of their coin. So like the network effect of their operation, I mean how many users and so on. And this metrics will be balanced by the value of fees, and the lower the fees, the lower the metric will be. So it will be close to price to sales in terms of the general meaning of that. In any case, very interesting to see what they are doing, especially since you basically can get the data and play with it. So go ahead and read the article. I think it's really interesting and useful. And that is it for today from my side, guys. I hope it was useful. Thank you for watching.